Hi traders, it's Andrew and I want to show you an example of a bullish crab pattern. Once again, you want to identify key levels of support or resistance from your higher time frame. We're looking at a daily chart at the moment, and you see this upswing here. We want to take our Fibonacci and draw it from the low up to the high, so we're looking at the major swings. We then want to take our horizontal support resistance line and just move it down to locate potential areas of support resistance. Now we've come down to that 38 level and we've bounced quite nicely off that area already. We just have a look a little bit lower here around these lows. You can see price holding a support along the way. Resistance breaks through, becoming support. And it's at these areas here that we're looking to structure potential trades. If we now move over to the 4-hour chart, let's have a look at what that area looks like. You can see price holding very nicely around this level here. Good support. Remember, we're not trying to look for the exact turning point in terms of the level. So what we're doing is we're looking at possible patterns setting up that complete at these areas. That adds to the probability of the trade working out. So if we have a look at the hourly chart, you can see price rallies and then it starts to retrace. So if we have a look at this right here, we draw our fibs in from the very low up to this high. See how price rallies, it then starts to retrace and it comes down and finds support at the 62% retracement. Now, as with the butterfly, we're also looking for very specific retracements. So I'm looking for a 62% retracement for the crab pattern. And we just trace this in for you. So we've rallied off the lows. We've then retraced all the way down to that 62% Fibonacci level. And then we've started to rally. Now once that happens, you want to take your fib tool and you want to draw from the high down to the low. You can see we have a 79-127 extension, and that forms your bullish Gartley pattern. And if that fails, then what you want to look for is you want to look for the crab pattern, which forms further down. So if you have a look at our extensions or projections, there's the 127 that we've been using for the butterfly, and there is a 1618 with the 2618 projection from the smaller swing. So very, very tight confluence, and the tighter the number is to that 62 Fibonacci level, the tighter this number and this number are going to be. So that's the level right there. If we just drop this line down, that's the area of interest that I'm looking to buy at. And if we just move to the 4-hour chart and just move this out the way. So if we now take our eclipse tool and we mark this off, that's the area down there. So you see it's a very deep retracement. Okay, there's the 127 where most of the traders are looking. The 1618 combined with that 2618 is a very, very powerful turning point. And just have a look at that daily chart where that comes into play. See that lining up with the big 50 from the upswing. Okay, so we're getting a pattern that's giving us an opportunity to enter in right at the number. Now with these patterns, you need very, very small stops, because they either work very aggressively or they continue to the downside. So if we have a look at this, I'm just going to compress this and look at this area here. If we use a 40 pip stop and we're going to target up towards the highs here for about 200, so it'll be about 5 to 1 risk reward on the trade. Let's go to our pending orders. Want a buy limit 56. We'll add the spread in. Let's make it 17. And I'm going to use a 40 pip stop and the target I want up towards the highs around that 58.20 mark. So if we just see what happens now and follow price along. So price breaks down. You see it stalled very briefly at the 79,127, and then it takes another leg to the downside. So we just follow it along. Big spike down. These patterns can take quite a while to set up, so you really need to have patience for them. Okay, so we've now been filled at the key level, and look at the reaction of this area. Once again, have a look at that daily chart, very key higher time frame level, and we get this hourly pattern forming and completing right at this level. So we have an actual method of entering right at this area, and like I said, very tight stop needed, because normally you see price respect this area and should release at some stage. Now the key support or resistance area at the moment is this level right here. That's point X. So if we look at this in terms of numbers, X, A, B, this is the C swing up, and then this is the D completion point all the way down here. So it's quite an extension to the actual pattern completion area. And see how price sort of sits in this area. We just have a look at the open positions, currently up about 50 pips. So price hits the resistance, it breaks through, and now we're starting to release. So you can see the actual drawdown on this was very, very small, so you really don't need big stops if these patterns are going to work out. Now you just need to be patient and let the market do its thing. This is an hourly chart, so it's taken quite a while to get going here. If we just move to the 4-hour chart. Alright, so eventually we break to the upside and the target is hit. And you can see the trade, we risk 40 to make 200, so very, very nice risk reward on the trade. And as I said, very tight stop needed on these patterns. You can see price actually continues to the upside. So that's the bullish crab pattern.